Hi guys, my name is Michael. Welcome back. So today I've got some information to share with you guys. I want us to take a look at a couple of things that is going on behind the scenes when it comes to gold. Now, if you take a look at the article in front of us, this article was written around 12 months ago. So basically, we're talking about August of 2023. And if you see this article, the analyst in this article was predicting a gold price of 2,500 in the next 12 months. So as at August of 2023, they were predicting that gold would hit 2,500 by August of 2024. And also, if you take a look at the second point of this article, as at August of 2023, gold was outperforming every other asset class in the financial markets, right? Gold was outperforming every other. So coming from 2022, so if you look at 12 months from 2023, from August of 2023, we're talking about August of 2022, and as at that time, gold was outperforming every other asset class. And I want you to put that at the back of your mind as we go into this video. Also, there was an analyst from Livermore Partners. He was calling for a gold price of over 2,500 in the next 12 months. So we're talking about August of 2024. And the reason why I am bringing this to your attention is because if you take a look at what happened last week, for the first time in history, gold hit $2,500 an ounce last week, and that was a new all-time high. Now, if you take a look at the trend of gold has been setting new all-time highs. So in the month of July of 2024, gold made a new record of $2,400 an ounce. That was a new all-time high, but that has now been broken in the month of August. So in the month of August, we've seen gold now touch 2,500 an ounce, and this just shows you the path of gold. But as I always say, I strongly believe that these are just little compared to what is on the horizon for gold. And that is why I am bringing all this information to you guys. So if you take a look at this article from Bloomberg, it said gold tops 2,500 for the first time on outlook for lower rates. So if you look at this paragraph, it said spot bullion climbed as much as 2.2% on Friday, exceeding the previous record set last month. So gold set a new record in July, and it has broken that record in August. That just shows you that gold is on a path, is on an upward trend, and I want us to catch this trend because I strongly believe that it is a big move that is on the horizon, and I want us to be properly positioned for that move. So if the last paragraph said the precious metal is up more than 20% this year. So if you look at the last article I showed you, it said as at that time, the last 12 months, which was in August of 2023, 12 months to that date, gold was already outperforming other asset classes rather. And if you take a look at this year again, gold is already up more than 20%. So we are just in the 8th month of the year and gold is already up 20%. So what it means is that at the beginning of this year, right, if you had put money in gold, you would have been up over 20% right now, and that is really outperforming even the S&P 500 is not doing what gold is doing right now. And this is very unusual because gold, historically, if you look at the last 53 years, gold has not been delivering this kind of returns. And so this is why we need to pay attention on what is happening to gold. So if you take a look at this chart here, let's look at this article from Barron's. It said, from MarketWatch rather, it said the rally in gold comes as global stock markets are on track for their best week this year in a worldwide rebound amid signs the US economy will not fall into recession after all. So what he's saying is that gold is going up, stock is going up. And those things are very unusual because usually when you see gold is always used as a safe haven asset, right? So people buy gold when they feel that there's an issue in the global financial system or the possibility of a recession. But what we are seeing here is that they are saying that a lot of people believe that the US economy will not fall into recession. So if people believe that the US economy will not fall into recession, why are they still buying gold? So we see here that gold is making an upward trend, even while stocks are making an upward trend as well. So stocks are rebounding and they are moving upwards, but gold is also doing the same thing. So it tells you that we need to look beyond the surface of what is going on, because those two things usually do not happen together. So usually gold is always inverse of the stock market. So when you have issues in the stock market, that is when you see gold going up. And if you take a look at the fear and greed index, regarding the S&P 500, on its 125-day moving average, you will see that the sentiment is still at greed. What it means is that people are still bullish on stocks. So that means people are still long equities at this point. Do you get? So we shouldn't be seeing the gold price go up the way it's going. And if you take a look at this gold chart here, you will see that at the lower end of October of 2022, if you had bought into gold, if you had opened a position into gold, you would have been able to ride this wave all the way up. Do you get? All the way up, because that is the trend that gold is on right now. And I'm telling you that there is still more to come. A lot of people might see this chart and say, you know what, gold has already done its thing. Gold is already up, close to 80% from 2022, right? It's already up close to 80% from 2022. So, and you might look at that and say, have I missed the boat? And I'm telling you that there is still more to come. Do you get? As a matter of fact, I see gold doubling, from this current price point, by the end of next year. And those are the kind of, that is my bullish thesis on gold. And that is why I am bringing this information to get us to position into gold, because gold is going to do a lot of, gold is going to surprise a lot of people as we go further. Because I've always said this thing, that there are two things on the horizon, right? Disruptions and opportunities. The disruptions, are going to come, but it is how you prepare for those opportunities that will follow the disruption that matters. And also, if you take a look at the VIX is also down, showing you that, the volatility is down in the market. So gold should not be doing what it is going right now. And that is just an anomaly. And that is why we are taking a look at, we are focusing on our attention on gold. So a lot of people might look at the upward trend of gold, and they might relate this to a couple of things that are affecting the global economy. One of them is the possibility of recession. But in that article in Market Watch, a lot of people were talking about the fact that they don't believe that the US will fall into recession. Another thing is that people might say, okay, inflation, they don't believe that the Federal Reserve has tamed inflation. Inflation is already baked into the system. The loss of purchasing power, of the dollar and other major currencies might be the reasons why a lot of people are buying gold. That could be it, right? Also, they were talking about geopolitical tensions, uncertainties, the US election, Russia, Ukraine, Taiwan, China, Israel, Hamas, all those global tensions might be a reason why people are buying gold. And those are the reasons, most analysts are giving for the upward trend of gold. So if we take a look at the recession, right, the recession fear, right, the reason why people are buying gold, you will notice that, and let us just look at what gold does in times of recessions. If you look at the last 8 recessions in the United States, you will see that 6 out of that 8, gold has done well. Do you get? If you look at the recession of 1969, 73, 81, 2001, 2007, and also the lockdown one, you will see that gold has done really well. So why other equities, why other asset classes were going down in this recession? Because if you have a recession, the stock market will go down. That is a no-brainer. But while the stock market is going down, we see that gold is doing well. It is not just holding, purchasing power and its value, but it's actually bringing returns in those period. So this is a case of where one side is saying cast it down, another one is saying lift it up, right? So gold brings returns in times of recession. And you might be in the school of thought that the US will not fall into recession, but it's good to understand that in a time of recession, gold is a good investment. You can see that in 1973, it brought around 75%, 7.4%, 6.9%. This is why other asset classes were down in the mud. Do you get? It was actually doing really good. So this is another good reason. If you're in the school of thought that the US will go into a recession, it is another good reason to hold gold. I personally think that the US will fall into recession. They just need the last bucket, the last leg of the table to fall, which is oil price. Once oil price goes up, it is definite that the US is going into a recession. So that is why we also need to monitor the price of oil as well. And I'm going to talk about oil in another video, just to give you a good understanding of what is going on. So we're also seeing demand for gold increase, right? A lot of people are talking about the fact that central banks have been, that is no news. Central banks have been buying gold for the last 10 years. Central banks have been buying gold, record amounts of gold. And a lot of people are talking about the fact that, a lot of countries are looking to diversify their reserve, moving away from the US dollar, trying to, de-risk or de-risk themselves, from the US dollar. So a lot of central banks have been buying gold. So this might be the reason why the gold price is going going up. You know, the demand for gold is just high. And one of the places where that demand is coming from is from the global central banks. They're all buying gold. Another area of demand that we are seeing coming to gold is from the east, which is China and India. A lot of retail customers, a lot of regular Joes are buying gold in those countries, and that is because gold holds a significant place in their culture. A lot of people actually saving gold in India, a lot of people saving gold in China. And in China right now, the real estate where a lot of people usually put their money is having a lot of problems. So people are moving away from real estate because the real estate in China is, you know, is going through a lot of crisis at the moment. So most people are moving their money from real estate and putting it into gold. So we are seeing a record demand of gold come from China and India in those places. But the reason why I brought this up in terms of demand is that we are also seeing a new demand coming, and this might affect the price of gold long term. And that demand is coming from hedge funds. Now, hedge funds have been basically they've sidelined gold in the last couple of years. Most of them have removed their gold positions. You know, previously back in the days, you know, a lot of hedge funds used to have gold. They used to put like 5% of their portfolio in gold as a form of backup, as a form of safe haven against any uncertainty or black swan. You know, but this changed over time. Most of them, instead of putting 5%, instead of allocating 5% of their portfolio to gold, they started changing into US treasuries. And this is why I talk about the fact that the US treasuries and gold has been in competition for a while. So most hedge funds, rather than allocating 5% to gold, which they traditionally did, they changed that thing up and they were now more into treasuries, short-term, long-term treasuries. They were most of them just put their money into treasuries. But what we are seeing right now is that hedge funds are returning back to gold, and hedge funds are a big whale, you know, when it comes to the global financial system. So what I'm saying here is that if this trend continues to pick up, where hedge funds, you know, continue to allocate a good portion of their portfolio to gold, then we will see that demand of gold continue to pick up. So if you look at this article from Bloomberg, it said hedge funds and other large speculators boosted their net long positions in gold, often used as a hedge against rising political and economic uncertainty, to the highest in more than 4 years as of July 16. So as of July 16, right, they all of them have been increasing their gold position. And because you need to understand that the recession risk against that is facing the United States is also going to affect the US treasuries, right? So a lot of people are trying to also hedge against the US treasuries, if I can put it that way, because if the US goes into a recession, it will affect those treasuries that they've been using as a hedge, as a backup. Do you get what I'm saying? So even the backup right now needs another backup, and that is where gold comes in. So this huge demand that we are seeing from hedge funds, if this trend continues, and all hedge funds return back to the previous way of doing things, where they allocated 5% of their portfolio to gold, then we will see a huge demand for gold, and this will affect the price of gold in the long term. So these are some of the things that we need to watch out for as we move into further into the year, and especially as we go into next year. Now, if you're a subscriber of this channel, you will know that our investment model in this place is we are waiting for the wave. I believe that there will be waves of opportunity as we go further into the year and into the decade. There will be a lot of opportunities. So my job is just to, point you to those areas where there is a wave about to come. And so we are like surfers, right? We're just waiting for the wave. And the first area that I've been talking about recently is gold. I believe that there is a wave coming from gold, and this upward trend that we are seeing in gold, this slow, but surely upward trend that we're seeing is just a build up. It's just a build up, into something that I feel like will be an explosion at some point. So I strongly believe that the price of gold will explode at some point. Do you get? And it's going to be a big move, and I truly want us to be positioned in gold, so that we can catch that wave when it comes. But while we're waiting for the wave, I also want you to remember that I am not a financial advisor in any way. Everything I say in this video is just my own personal opinion. Please do your own due diligence and consult a financial advisor if you need one. So guys, Thank you for watching the video. If you like videos like this, please do subscribe to the channel, click on the notification bell, and I'll see you guys in the next one. Bye for now.